Hey, I was talking to an investor a few days ago, a normal investor call, trying to see if they're a good fit for my fund. Really experienced in a lot of different assets, and I was trying to make them understand why they should join my fund and do the deals, the same exact deals they're already doing, the same syndications, the same funds, do it through my structure and how it would benefit them. Because there's a rumor out there that says if you use a fund of funds or something that helps you access these deals, that the manager is hurting your returns somehow, and that could be, nothing could be further from the truth. It does depend on the fund manager, but I'm going to show you exactly how I'm helping my investors. I'm profiting because my money's in there with them, invested alongside them, and it is the biggest no-brainer in alternative investments. Real quick, let's look at this. If you're already invested in multifamily, and hopefully you are. Hopefully you are well diversified across multifamily, self-storage, mobile home parks, maybe even a marina or car wash, private credit, private equity, oil and gas. Hey, if you're in all those, great. You are ahead of the game. Most people are not that well diversified. My fund aims to be that well diversified every year. We're trying to bring deals like that across our in front of our investors' eyes every month. That's the goal. Now, if you're in these deals and you've gone in by yourself, I'm going to be real generous and say that you've been able to put $100,000 across each of these asset classes. And if that's the case, maybe you've got a nice portfolio with $700,000 in these assets. I doubt you do. I see from conversations I have every day, I see people that have got way too much in multifamily. So instead of 700 spread out, they've got 300 or 400 in multifamily. They may have found a self-storage operator they like, or a mobile home operator they like, and they've got 100 there and 100 there, but they are not well diversified at all. That's number one. But let's just say you are that well diversified. And these are the splits. If you're an investor, you understand the splits, 70, 30, 60, 40. Those are some standard splits, especially if you're coming with the minimum of 50,000 or maybe 100,000. You're going to get that lowest tier of split. How does my fund help you? What if I could turn this 70 into 78? What if I could turn this 60-40 into 72? What if I could turn that 70 into 75? And this one, what if I could turn that into maybe even 80? And what if I could, instead of 9% here, what if you did 11% over here? And what you probably didn't even see this one because you didn't have the ability to see it. You didn't have the minimum because it was $1 million minimum. You're not going to see it over here. What if I can bring that to you and you actually get to see it over here? And oil and gas, you didn't see it because you don't know the ways to get the working interest tax credits, and so you didn't even have that. But now we bring that into play over here, and you're looking to 2x your money in 5 years and a huge tax break. So what I did, if these were $100,000 deals, just on these splits, okay, just on these splits, you're going to make more money here. You're going to make more money all across the board. All of them are better inside my fund, okay? And guess what? You're going to get 1 ppm here that you got to deal with. I'm sorry. You're going to have to read all these ppms, but K1, 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 pain in the ass, pain in the ass, pain in the ass. You're having to do all those K1s. Over here, you're under a single umbrella. You're going to get 1 K1 that encompasses all of this. Makes your job a whole lot easier. Yes, we do have to wait on every K1, but you're going to get 1 K1 that summarizes everything here. Makes it a whole lot easier for tax preparation. You're making more money. You're getting to do deals. How does this work? Folks, this is the Costco effect. Because you're in this fund and you're in here with 20, 30, 40 other investors and we're pulling our money together, we go with a bigger check. And that's when this guy says, good grief, you're bringing $1 million. If you'll bring $1 million, I'll do 85-15. Self-storage says, if you'll bring $1 million, I'll do 90-10. You're going to make my job so much easier. Mobile home park says same thing. Let's do 80-20 there. It's a harder deal to get, right? Marina, that's how it works. It's buying power. So it's the biggest no-brainer on earth. If you're already investing passively in syndications, in some blind pool funds, how about we come over here and let you pick and choose what you want? You get to pick and choose each asset. You can pass on what doesn't fit you. Plus, you get all kinds of benefits from being in a group together. You get mentoring, you get all that. We're not a financial advisor. We're just going to throw it out there, and you get to pick and choose whether you like it or not. So if some structure like this sounds appealing to you, it exists. And I asked investors, why in the world would you continue to go it alone and get the worst economics when you can partner with others and get improved economics that literally, this $700,000 a year, it could literally add tens of thousands of dollars to your returns. And the fund to fund manager made it possible by being fair and equitable and sharing these increases with you. It all works out for better returns. Why in the world would an investor not want to invest in this structure? If you'd like to talk about how my Smart Flex fund makes this possible for alternative investors, you got to be an accredited alternative investor. But let's talk. Let's jump on a phone call. Comment below this video, and let's make this happen for you.